All right, Rajat Bhattacharya is Senior Investment Strategist at Standard Chartered. He joins us right now. Rajat, good morning. Good to have you with us here. Tomorrow night you have the US Fed decision. If they do indicate after a 75 basis point hike tomorrow, if they indicate a downshift in the pace of hikes, could that spark a rally, global rally? The S&P, mind you, as I was pointing out earlier, is already up some 11-12% in the last 12 sessions. But could this stretch meaningfully higher if that were to happen? Your sense?
Yes, Prashant, I think you've hit them on the head. Fed is probably going to hike 75 basis points, as you say, and then they're going to signal what is ahead. Now, one of the things that we need to watch out is that whether Powell is very clear and precise about that. I doubt he's going to be that precise. He's going to go by the data. We saw earlier the ECB president, Lagarde, use that same phrase, right? They are very data-driven and they're not very clear. They didn't give a clear guidance. I suspect that Powell is going to say the same thing. But yes, to your point that we're not going to see 75 basis points of rate hikes on and on and on, right? So what the market is expecting is another 50 basis points of hike in December, and then we will see. The terminal rate, we discussed it last time, is around 5%. Now, whether the market, whether the Fed even talks to that, whether it confirms that or plays down that, is what we need to see. My suspicion is that he's going to first talk about where the job markets are, and we know that labor market is red hot, right? That is the one key thing that is holding back the Fed. We have to see the jobs job openings. We have to see the job market report, and all of that will come after the Fed, right? So the job market report especially will come after the Fed. So that is something to watch. But to your point, yes, I mean, we are expecting a slowdown, but what will the Powell be very precise about that? I doubt it.
Okay. Rajat, good morning and thanks for joining in. It's been a bumper Diwali and perhaps an early Christmas for investors and traders alike here in India, right? Do you see more legs to the October rally here in India? And if yes, would you pump in more money in emerging markets like India? Does your preference lie here or elsewhere?
Yes, Sonia, India is the star. We've discussed it on and on in this show, right? That I mentioned that across this, if you look at this global backdrop, India stands out. And why is that? There's a fundamental reason. India's earnings, India's economic growth are superior to what we see elsewhere in the world, especially in the emerging markets zone. So if you look at year-to-date performance, no surprise. In India is at the top end. You could take some of the LATAM markets, and that's primarily because they were propped up by the commodities. But India is an internal domestic story. I'll give you just one number. I mean, the FY23, the current fiscal earnings growth estimates for the Nifty is 15%. Where on earth are you going to get that kind of earnings growth? So yes, there is a fundamental story, and this is why we are very bullish on India. It's our top pick in Asia. But I must also add that valuations have become a concern, and I've raised that earlier as well. That doesn't mean that India has to, markets will pull back. But what I'm saying is the valuations are now more attractive elsewhere in Asia. You look at China, for instance, rock bottom. Chinese assets are going on sale. They've gotten worse in the last 1-2 months, and with 7, 8, 9 PE, you get good value in some of those assets. So our point is that basically stay bullish on India, and you can see the money flowing into India. You have domestic investors through their regular savings plans, and that's the right way to do, are adding to the exposure, but also be aware and be diversified, right, if you can.
Okay. Hi, Rajat. Morning. Good to hear India's your top pick. Valuation's a bit of a concern. But given the fact that, as you said, the Chinese market has underperformed and valuation-wise, that's yummy. Do you see, would you look to allocate more money towards the Chinese market because of this? Because there are plenty of question marks still out there with regard to the leadership, with regard to the COVID policies as well out there. So is that a possibility? And also in the near term, do you think India can underperform developed markets? If we have underperformed the US markets in the last 1 month, so I ask.
Yeah, I mean, to your first point, we are increasingly, the valuations are so attractive, assets are going on sale in China. Now, to your point, what we heard in the recent last few weeks is a reiteration of their policy of building the domestic economy, right? The China internal development story, where they want to make China a prosperous society by 2035. And all of that means is that they're going to put a lot of money into hard technology, into advanced computing, into 5G, into robotics, into green energy, and that is where the money is going to go in. That is where the money is going to be made. So if you're diversifying, we need to be a lot more picky about which sectors and areas we want to go to. The software sectors, for instance, are the old story. The new story is the hard tech. So we need to focus on those areas, the green energy sectors, as I said, semiconductors, artificial intelligence. Those are the areas you might want to pinpoint when you invest in China.
Right, Rajat, thank you very much. Great to have you with us here on the program. Appreciate it very much. By the way, to that point on what's happening, what you're talking about with regards to China, look at